Hi, this is Lara at Elliott Wave Gold with an extra update video for you after the trading session for Thursday the 17th of March has closed. We saw a small sideways correction at the hourly chart level, followed by more upward movement for gold. That was exactly what was expected. There's now a nice clear 5 up at the hourly chart level, which gives a bit more confidence to the wave count. Short term, I have 2 hourly charts. If price remains above 1255.66 and makes a new high above 1266.27, then expect that a third wave up is very likely underway. The target is 1327 for the shorter term. Alternately, and equally as likely, if we see a new low below 1255.56 in the next 24 hours, that would indicate that a second wave correction is deepening. The target is 1243.50. Mid-term, the trend for gold still remains up. I expect it's in a fifth wave, and fifth waves for commodities can be swift and strong. This could show an increase in momentum for gold. My wave count at the weekly and monthly chart level for gold sees a big trend change at supercycle down here. We've had a new swing high. Price is broken above a long-term held bear market trend line for gold, and so I don't have any bear wave counts because the technicals indicate that gold is now in a bull market. And so I'm wanting to see a clear 5 up complete at intermediate degree at the daily chart level, and probably also to be fairly clear at the weekly chart level for a move of this degree. We don't quite have that yet. The final fifth wave up is now underway. So far we have a short first wave, a deep double zigzag for a second wave, a third wave complete here. The subdivisions are all perfect, and within it there's alternation between this fourth wave triangle and the second wave zigzag. So this is where I expect minor wave 3 has ended, and we have an expanded flat correction here for a very shallow fourth wave. So there is perfect alternation between minor wave 4 as a shallow expanded flat and minor wave 2 as a double zigzag that was very deep. This is very likely where minor wave 5 begins. Within it, minute wave 2, if it is going to be deeper, may not move beyond the start of minute wave 1 below 1225.95. Draw a best fit channel around this upward movement at the daily chart level. Draw it from 1 to 3, place a copy not on the low of 2, but pull it down to sit on this low here so that it contains all this movement with the exception of an overshoot for the middle of the third wave, and that is an absolutely typical look for the third wave. So I have confidence in at least this part of the wave count. If minute wave 2 is very time consuming, and if I'm wrong and if the invalidation point is breached, then this lower edge of this channel should provide strong support. I don't think price is going to get down that low so far though. I have 2 hourly wave counts for you which look at minute wave 2 in a different way. Both of them see minor 4 over here, which is this point down here, and now at the hourly chart level we have what looks like a nice clear 5 wave structure up. 1, a deep double zigzag for 2, 3, 4, 5. A relatively shallow and swift correction for the fourth wave. With a clear 5 up at the hourly chart level, that adds a little bit more confidence so far to the idea that minor wave 4 is very likely to be over here and minor wave 5 is very likely to be underway. In the short term, the only question with the analysis today is whether or not minute wave 2 is complete as a relatively shallow quick zigzag down here. Although I am presenting this first hourly chart first and labelling it main, and the next one is labelled alternate, I judge them to have a close to even probability. I'm not going to prefer either one because I expect that price is going to tell us within the next 24 hours which one is correct. For this idea, if minute wave 2 is over here, it does show up at the daily chart level as a small green doji with this COMEX data that I'm using for my Elliott wave analysis. And so that would have a reasonable look if minor wave 5 isn't going to be a very long extension. If it's over here, then at 1327, minute wave 3 would reach 1.618, the length of minute 1. That fits with the higher target for minor 5 at 1338. Minor 5 will reach 2.618, the length of that very short minor wave 1. If minute wave 3 has begun here, then within it, no second wave correction can move beyond its start below 1255.66. If minute wave 2 is over here, it's a relatively quick and relatively shallow zigzag, falling a little short of the 0.382 Fibonacci ratio. It's also remained within the trend channel that contains minute wave 1. That's a little bit of a problem. It's not a completely typical second wave correction, and so the alternate hourly wave count, which has about an even probability, should be given serious consideration. It is entirely viable. As price fell at the hourly chart level, it comes on a decline in volume, and so this fall in price is not supported by volume at the hourly chart level, and that fits the idea that we may have a low in place here. If we see a new high above 1266.27, I will have reasonable confidence in this first idea at the hourly chart level. Within minute wave 1, this labelling fits with the volume profile and fits with MACD. The third wave is seen as the strongest, it has the strongest momentum, and the strongest middle part of the third wave has a volume spike. That's really typical to see a very strong movement within the middle of a third wave. This fits perfectly. It's all identical to this point here, and then what if this is just the first zigzag of a deeper double zigzag for minute 2? This would actually give minute 2 a little bit more of a typical look. It could end about the 0.618 Fibonacci ratio at 1243.50. Double zigzags are quite specific structures. They should have a clear slope against the prior trend. So if this is what's happening, this downward movement should have a clear slope, not be a sideways movement. In order to achieve the purpose of a clear slope against the prior trend, X waves of double zigzags are usually quite shallow and often, but not always, quite quick as well. The second zigzag in a double exists to deepen a correction when the first zigzag in the double does not move price deep enough, and minuet wave W could certainly fit that description. It's fallen just a little short of the 0.382 Fibonacci ratio. So this second idea would give minute wave 2 a clearer look, a more typical look for a second wave. It is entirely viable, but let's wait for price confirmation. If this idea is correct, we should have price confirmation relatively quickly with a new low below 1255.66 by any amount at any time frame would invalidate the first hourly chart and provide some confirmation of this second idea. To the upside, if we see a new high above this point, then minuet wave X would be making a new price extreme beyond the start of subminuet C. Now, there is no Elliott wave rule that says it can't do that. It's just my judgment based on experience that X waves of double zigzags should be relatively shallow. And so I'm using the concept of applying the rule of a second wave within a C wave. Within subminuet C, no second wave correction can move beyond its start of the first wave. I'm going to use that idea and apply it to minuet wave X. If minuet X moves beyond the start of subminuet C, then I expect that's not what it is. I would go with the first hourly wave count if that happens. So for this idea, price really should remain below this point. We need confirmation with a new low below 1255.66. If we get it, expect price to continue on down to 1243.50. Minute wave 2 may not move beyond the start of 1 below 1225.95. Some classic technical analysis. Now gold is range bound, delineated by this pink trend line about 1280 and this pink trend line about 1225. It's been moving sideways within this range starting on this day, the first day of the consolidation. So when we look at volume for this range, we see that it is an upward day, which has the strongest volume within this sideways range. Gold is usually fairly reliable with volume. This volume spike here for this day tells us it's more likely that the breakout from this range is going to be upward than it is to be downward, and that's a fairly reliable indicator for gold. That supports the Elliott wave count. While price has been moving sideways, ADX is declining to flat. That's also telling us that price is range bound. We're not in a trending market yet. ATR for the last few days is starting to overall flatten off, and that too agrees with ADX. They are both telling us the market is range bound at this stage, not yet trending. On balance, volume may assist us to see what direction price is going to break out. It's come again to touch this orange trend line. If on balance volume turns up from there, that would be a reasonable bullish signal. This trend line is almost horizontal, and it's been tested 1, 2, 3. This is the fourth test. So if on balance volume turns up from there, that will strengthen this trend line, and that will make it more technically substantial. So that would be a reasonable bullish signal. If that happens, on balance volume may find some resistance at this downward sloping green line, but this one isn't so long held. It has a steeper slope, so it's not as technically significant as the orange line is. If we see a break above the green line, that would be a somewhat of a bullish signal, but weaker than support at this orange line would be a stronger bullish signal. RSI is not yet extreme. There's plenty of room for the market to rise or fall. Stochastics in conjunction with those range-bound lines, the pink lines on price, resistance and support. If the market is range-bound, we should expect price to swing from resistance to support and back again, and we use stochastics to help tell us when one swing ends and the next begins. Here we're swinging up, so expect more upward movement until stochastics is overbought and price reaches resistance, but at that stage the Elliott wave count is going to be expecting an upward breakout. That's all for me today with your gold analysis, and I hope that all of our members are having a fabulous day.